Good evening, all. Ira Epstein with your SPDR ETF stock wrap-up. And this wrap-up is for Wednesday, the 4th of January, 2023. It's hard to say that, 23. And we're sitting at 6:50 p.m. Central Time. A lot of green behind me. Yeah, we have our fair share of red, but it's in the energy sector, which is a good thing, right? That helps the inflation story. We saw silver come down a bit today, got up nicely to some important numbers where I thought we'd run into resistance, and you did. Airlines up a little bit. Jets was stronger, the SPDR, than I thought it would be. That was not a winning trade for me, by the way. So, I do have losers too. Who doesn't? But XLF was great for us today. All right. So let's talk about the markets and what's going on. We had the FOMC minutes come out, and it's very clear that every single member, every one of them, does not think that the market is going to see interest rate cuts this year, which flies in the face of all the market analysts out there who think that the Fed will pivot, many of them, in the last quarter of this year. We'll see. What bothersome to the market is labor. That's what the Fed said. And if you looked at today's JOLTS data, the amount of ads per available working force person, it just keeps growing. It should be shrinking. In other words, if things are so bad, employers should not be running ads to hire people. I'm giving you the simplistic way to look at it. Forget all the other junk they all talk about. That's what the JOLTS is. And at the end of the day, more people want to hire. Okay. Tomorrow we get unemployment claims. They have been disappointing. They've been gradually coming up. And we're looking for the jobs data, the jobs report data, and that report is going to come out Friday, and they're looking for 200,000. Now, that would be a nice reduction from the 270s we've had, but keep in the back of your mind, this has been a miss every time, and 200,000 is still a big number. We're still adding a lot of jobs. So when you put this all together, it gets to be a bit problematic for the market. This is what I call labor week. JOLTS, unemployment claims, and the big jobs report. After that, we'll move into the inflation reports and see how the month did. But can the Fed be happy with today's JOLTS data? Absolutely not. So we have got 2 more days where we got to look at labor. And after that, there's no real big labor report until the FOMC meeting. What will that do to the Fed mentality? If you have a weak jobs report, they're going to feel good about a quarter point. If you have a improved, in other words, bigger jobs gains, they may stick with a half point. The market doesn't think so. They may do it. A lot would depend then on the inflation readings that we get for the month. When we look at Costco, I'll even come back here. This is a chart without my swing line. And if you learn the swing line allows anybody to sit there, take a look at a market, and tell anyone what is the trend. If you believe that the trend is made up in a downtrend of lower highs, lower lows, how do you pick out where the highs were on the market? Well, one of the ways I did it is I created an indicator called swing lines. I did this, I got to tell you, it's probably 25 years ago. And it has served me well. And then I put filters on it. But something happened today that's, to me, bothersome. And I'll explain it to you. If we take a look at yesterday, we had an outside day down. Now, for those of you that take my outside day course, what should not happen is you should not take out yesterday's high today or tomorrow. What it did is it took it out. What does it imply? It implies very subtly that unless the market immediately gets back under that low, the market wants to rally up to a resistance point. What is that resistance point? Well, it could be the 18-day average. What else did it do? It broke the pattern of lower highs and lower lows. So for traders that look at the market and they say, I'm looking for an indicator that says maybe this market has run out of steam to the downside, the first nail in the coffin. Doesn't mean it's the coffin sealed. First one is out there, warning sign, warning sign. Next, we didn't make it to the Bollinger Band. You did back here. lacking the momentum to get down there. Another problem area. And last, you're still embedded. That rules the day. So unless you get over a 21 reading, this rally could easily peter out, but it doesn't mean a rally of sorts isn't in the cards here. So I'll be watching to see if we get a bounce in the market. In the battery, the lithium LIT ETF, you just keep with the embedded reading. The market is bearish. When you get a reading over 21, it will be a sign that a short covering rally is going to ensue. Apple keeps coming down, as you can see. It's got the embedded reading. It's just not acting good. Disney, I told you it was doing better, I think because of Avatar, and that has legs. I believe it'll do well this weekend again. I mean, that's a movie that people want to see on the big screen, and it doesn't have any competition right now. That's the beauty. What blockbusters are coming at it? Nothing yet. You know, later, as we get into the later part of the winter, we get John Wick and some of the other movies that are coming out. I do keep up with them. You know, having owned the theater, it's just natural. And you look to see when they're going to get some of the business back. Those will be the next big ones for them. In XLF, as I said, a big day. Got up, challenged the upper Bollinger Band. That number's 35.17. You got to 35.12. That's close enough where you'd probably see the pros taking some money off the table on that. In XLI, there's no trend. You have a lower low, higher high, oversold market that is correcting finally. In XSD, the semiconductor ETF, it's a bear market rally. First resistance, 100-day, but the big resistance point is the combination of the 200 and the 18-day. Now, are we going to get a crossover where that 18-day average crosses under the 200? That would be another bearish sign, so keep your eye on that to see if that happens or not. Now, XHB, the home builders ETF, well, still climbing. So the market is thinking, hey, there's going to be demand coming in the spring. This is now, and I know you think I'm out of my mind, the market's looking at spring already. I know it's doing that. You can just see it on the chart action. All right, it's saying, hey, come spring, there's still going to be demand. People want to move, whatever it's going to be. And that's what's going on, I think. Doesn't mean I'm right, but that's what I think there. On the energy sector, today was, to me, a short covering day all day long. Why? First challenge of the Bollinger Band, 100-day average. It's exactly what I teach in my enhanced Bollinger Band course. Trend had been down, not embedded. That's where I think the pros come out of the market. Why is energy down? Because nobody knows how bad the situation in China is. In addition, the COVID breach that they're having, this monstrous outbreak that we think is going on, is being attacked by the World Health Organization. They're saying to China, we need numbers. Be transparent. What's going on there? China doesn't... The phones are off the hook. What did you say? What did you say? That's that. Now we got lunar holiday coming. What do people do in China on lunar holiday? They travel. What are they bringing with them? I'm bringing the COVID with me. I'm bringing it to areas that might not have it. We're going to give it to the rest of you out there. So the market is expecting, not Ira, the marketplace, and I'm talking the medical marketplace, is expecting another wave of outbreak after the lunar holiday as the infection spread, and then we might have seen the peak in the COVID. So is that bullish on, at this point in time, copper? No. Factory people aren't going to be around. Plus, you're already looking at a lunar holiday where everything shuts down. What else? Is that bullish on energy? Well, people will drive, but other than that, I don't know. Gold. Let me come back here to gold. You got 2 days in a row over the upper band. I'm not saying it can't go more than that. It rarely goes more than 5. And if you go back on your charts and if you buy over those bands, other than when you get a run-up like this, and this could be one of those, I'm not denying that. When you get one of those, you'll see a vertical move that ends up with an embedded reading. That's often the case. So we could be there. It's certainly not a short sale, but I tell my clients not to buy long over that. And by the way, as we get into these other charts and finish them up, I want to offer you free my full research. I write Monday through Thursday, 2 updates a day. Now, I'm bringing it up now because SLV, all these cover the futures markets, stock indices, TLT, BND, XLE. They're all based on this. Read what I have to say about them. See what I'm saying as to how the thinking goes. I want to give it to you free for 2 weeks, along with our charting software if you want that, along with our mobile trading platform. I don't want a credit card, don't need anything like that. You decide if this is something for you, and we'll talk about it right after I'm through with the charts. But you got up in silver yesterday where the pros came out. First time you hit an upper Bollinger Band, if you've taken my course on it, you learn what to do. In the copper market, this is as neutral as you can be, but look at how tight this Bollinger Band is. This is what I teach in my course. When you get to this sideways action at narrow in, run away from that market. When it breaks out, try to recognize it and jump on board. Sometimes an option play is better than a futures after the breakout. You haven't broken out. Now's the spinning where it becomes the loss frustrating move. You think it's going to go up, it reverses course. Think it's going to go down, it reverses course. Because it's got to spin around in here to build power for the next move, whatever that's going to be. This is a bear market rally in TLT. Higher lows, higher highs, into the idea, at least I think, of the resistance at the 18-day average and the 100-day average. When you look at UUP, up to the resistance, right through there, and that's the dollar index. It's neutral going into all these jobs reports. And FXC is neutral. No trend in that. Right back down to those reports. So when I look at them all and I try to figure out what to do, it's an interesting time. But it's only the second trading day of the year. Now, I'm going to get you upset. The Santa Claus rally worked. Today was the end of it. So if you take from December 23rd to now, 3 of the 4 stock indices had very minor gains. So it will go in the record books, believe it or not, and I wrote about it in tonight's report, is the 7th year of a winner, I think in a row. Interesting time. Feeble, no question. I think we were all hoping for a much better rally, but it was there. Now, as I told you, I want to give you my report so you can see just what I'm talking about. And it's my full research. So you're going to get the morning videos on SPDR, ETF stocks. You're going to get the morning video on the futures. You're going to get twice daily updates, Monday through Thursday, 1 update Friday morning. If I put out special updates, you'll get those. And then you get access to the weekend news plus a Sunday night written update. I write in the way that I think you'll enjoy. It's bullets, and my reports are intended to be read in under 2 minutes. But they're intended to lead you right into an area for a trade in some manner or the other. Okay, I'm done reading reports that are 8 to 10 pages long. One of the best ones I used to read was Dennis Gartman. It was like he wrote a book every night. But the reality of the situation is I don't have time to read that. And a lot of it's repetitive. Nobody can write that every night without being repetitive. I don't want to do any of that. I want to focus at different points. Like now I'm focused on labor. I'm giving you all the key points as to what the FOMC did. You don't have to sit there and plow through things. It's there in your hands and you see the highlights of it all. You can take it the rest of the way. How do you get it? It's free. You can go to our website under free offers on the top right. You can move your cursor up here. An icon will appear. Give it a click. Go there. Or the old-fashioned way, call my staff tomorrow morning. They'll be there. They'll take your call to get you set up instantly on it. Again, no credit card. Let me prove what we're doing and see if it fits in with your trading style. I'm Ira Epstein. You have a great day.